New passenger vehicles sold in October numbered 39,610 units. That's up 14.8% from the units sold in October 2024. While light commercial vehicles sold, including buggies and minibuses, rose by 23.9% to 13,361 units. Analysts say there's been a positive growth momentum in vehicle sales for over a year now.
New vehicle sales have really shown us strength this year. We think a big part of that has to do with the replacement cycle that is currently South Africa is currently undergoing, right? It's a replacement cycle in the household sector where you're seeing vehicles on the road have been kept on the road for an extended period of time, and I think consumers are probably seeing the current time as an opportune time to sort of replace those vehicles.
Mano also cited an increase in the corporate sector, particularly the rental segment, which she attributed to a general uptick in tourism levels in the country, with the summer holiday season also driving demand. Analysts say improved macroeconomic factors and even access to the two-pot retirement savings system have gone some way to boost consumer confidence.
Today, we again in an economic cycle where the interest rates are better. We've got a very stable rand-dollar exchange rate for quite a considerable period, which means car prices aren't increasing constantly. And we also have lower inflation for the consumer. So at the end of the month, once you've paid all your expenses, there are more consumers now that see that they've got the affordability to buy a vehicle. And so they've gone out and done exactly that.
While domestic vehicle sales numbers were impressive, export volumes registered tepid growth. 32,659 units were exported. That's up a mere 0.5% on the year before. And Mano worries that if export volumes don't move up more briskly, it could have negative consequences for the local car manufacturers and the jobs associated with them.
The latest numbers show you that there's a little bit of trouble that is starting to creep in, right? It's the tariffs, it's the uncertainty, it's the dumping issues, and we still have logistical issues here as well. So I think that export market might be a little bit troublesome going into 2026, but we know that structural reform is underway and South Africa is trying to work on a deal with the United States. So hopefully we get good news as we go into maybe the latter part of the forecast, 2027, 2028.
While a stable currency and cheaper vehicle imports, particularly from the East, as well as a lower interest rate environment have aided consumers in playing in the new vehicle market space, Botha argues that these factors alone won't be enough to sustain the growth seen of late.
I think just what we need to get sustained growth, as we've seen over the past year, I mean, it's double digits across light commercial vehicles and passenger vehicles. To see more of that, you would need job growth, employment growth, and you would need income growth to come through. And that happens when you've got investment. Therefore, that's always foreign direct investment into the country can create those. We're stimulating policies that can also help with that growth.
While interest rates are not the only factor in driving car sales, close attention will be paid to what the Reserve Bank does next in terms of its monetary policy stance when it announces its rate decision later this month. Nampumelo Siziba, SABC News, Johannesburg.